All right, welcome back to the deep dive. This time, we are diving deep into, well, this time it's crypto, especially Bitcoin.
Sounds exciting.
It is. So we have some really interesting source material from Nico. He's a crypto enthusiast. And this was recorded February 3rd, 2025.
Okay.
And let me tell you, he uses some pretty colorful language to describe it.
Oh, is that right?
Crackdown, point of pain, cleaned out. So, this deep dive is really for anybody, even if you've never even bought a Bitcoin. If you just kind of wondered, what is it like to ride that crazy crypto roller coaster?
Well, it sounds like Nico experienced a bit of a shakeup.
Yeah.
Bitcoin is definitely known for its volatility.
Right.
But it sounds like this particular drop was quite dramatic.
Oh, it was. He's talking about Bitcoin going from, high of $110,000, $111,000 down to $91,130. And that was in a very short period.
Oh, wow. That's a pretty significant drop.
Yeah, like 20,000, almost 20%.
Yeah, I can see why Nico might be using some colorful language to describe that kind of a drop.
Yeah. To really understand, I think, why this happened,
Yeah.
I think we need to kind of dig into, what happens in a crypto crash, especially, something called liquidations.
Okay, yeah. Liquidations. That sounds kind of intimidating.
Yeah, it can sound a bit scary, but it's actually, the concept's fairly straightforward.
Okay.
So imagine you're really into Bitcoin. You want to invest,
Right.
but you're thinking, how can I amplify my gains?
Yeah.
So you decide, okay, I'm going to borrow some money.
Uh-huh.
So you borrow money to buy more Bitcoin than you could just with your own funds.
Right.
This is called leverage.
Okay.
Now, leverage can be very risky.
Yeah.
So now imagine the price of Bitcoin drops, and if it falls below a certain level,
Mm-hmm.
the lender, the person who loaned you the money,
Right.
they get nervous,
Yeah.
and they automatically sell your Bitcoin to cover their loan.
Oh, I see.
That's a liquidation.
So it's kind of like a safety net for the lender, but a potential nightmare for the borrower. Exactly. And what happens is when a lot of people get liquidated at the same time,
Yeah.
it just creates this cascade, this domino effect.
Oh, wow.
And that drives the price down even further.
Okay.
Now, Nico, he actually mentions in his audio,
Yeah?
he saw billions of dollars, just poof, gone.
Wow.
Like $10 billion liquidated, then $4 billion, then another $3 billion. So you're talking like $17 billion just disappearing from the market like that.
Wow. So I could see, he was using those words wiped out and bleeding.
Yes.
It does sound like you're just hemorrhaging value.
Absolutely. It can be, it can be a very stressful experience.
Right.
And it really highlights the risks that come with this kind of leverage trading.
Okay.
But there is a little bit of a silver lining here because, Bitcoin after this crash rebounded by about 5,000 in just a few hours.
So even in the midst of a crash, there's potential for a very quick turnaround.
Yeah.
That's crypto.
That's crypto. Always keeping you on your toes, right?
Always keeping you guessing. So it's influenced by so many different things.
Oh, absolutely.
That's like, market sentiment, news events.
Technological developments, even speculation.
Yeah, it's almost like trying to predict the weather.
In some ways, yeah, you could say that.
But, like a meteorologist uses all this data.
Right.
And models.
Yeah.
There are people who are trying to decipher these signals.
Oh, absolutely. There are analysts and traders who are really trying to kind of read the tea leaves and make predictions about, which way Bitcoin is going to go.
Speaking of predictions, Nico, he has a pretty optimistic outlook despite this recent crash.
He does.
He's predicting something called a short squeeze.
Interesting.
What exactly is that, and why is he so confident?
So a short squeeze.
Yeah.
This is really interesting. This can happen in any market. It doesn't have to be just crypto.
All right.
But to understand a short squeeze,
Yeah.
we have to understand what it means to short an asset.
Okay, break it down for me.
So imagine you think, you know what? I think the price of Bitcoin is going to go down. You can actually profit from that belief
Right.
by shorting Bitcoin.
Okay.
So you're basically borrowing Bitcoin from somebody.
Right.
And you sell it at the current price.
Okay.
If the price goes down, what you thought it would,
Yeah.
you buy it back at that lower price.
Okay.
Return it to whoever you borrowed it from.
Yeah.
And you pocket the difference.
So you're essentially betting on the price to fall.
Exactly.
Okay.
But here's where the squeeze happens.
Okay.
If the price of Bitcoin starts going up instead of down,
Uh-oh.
people who shorted it start losing money.
Right.
They might be forced to buy back Bitcoin at a higher price just to cover their losses.
Okay.
And this buying frenzy can push the price even higher, and that's what squeezes the shorts out of their position.
Oh, okay.
It's like this chain reaction of panic buying,
Interesting.
but driven by people trying to cut their losses rather than the fear of missing out.
Oh, interesting.
Exactly, yeah.
So Nico believes that enough people will buy Bitcoin,
He thinks
possibly seeing this crash as like a buying opportunity.
it be.
And that's going to trigger the short squeeze
Yeah,
and send the price like skyrocketing.
that's his prediction.
Okay, is there anything to actually support that view?
Well, it's important to remember Nico's just one voice, and crypto is notoriously unpredictable.
Right.
He's clearly passionate about it. He's very knowledgeable.
Yeah.
But his prediction is just one of many possibilities.
Okay, so we shouldn't necessarily rush out and buy Bitcoin based on his prediction.
Probably not a good idea to base your investment strategy on any one person's prediction.
That's sound advice.
Yeah.
Now, he also mentioned a couple of other cryptocurrencies. He talked about Ethereum and Solana.
Right.
It sounded like they kind of experienced a downturn as well.
They did. This recent crash wasn't just Bitcoin. It was the entire crypto market.
Oh,
Even established cryptos like Ethereum, which is the second largest by market cap.
yeah.
They saw pretty big drops too.
So even if you diversify your portfolio,
Yeah,
you're still exposed to that overall market volatility.
absolutely. That's a really good point.
Yeah.
Diversification is great.
Yeah.
But it's really important to understand that the crypto market as a whole,
Yeah.
it's still relatively young.
Yeah.
And prone to, some pretty big price swings.
It's like riding a roller coaster, but it's the entire track that's going up and down, not just your little car.
That is a fantastic analogy.
Yeah.
It really captures the interconnectedness of the whole crypto market.
Right.
Even if you're not directly invested in Bitcoin,
Mm-hmm.
its price movements can still kind of ripple out and affect everything.
So even though we're kind of focusing on Bitcoin in this particular deep dive,
Right.
we have to remember it's just one piece of this larger puzzle.
Exactly.
So he also mentioned a really interesting conversation he had with a colleague about different trading strategies.
Interesting.
So he talked about spot trading
Right.
and using leverage.
Yeah, we talked about leverage.
Yeah, we did talk about leverage earlier, but what is this spot trading?
So spot trading.
Yeah.
This is the most straightforward way to invest in crypto.
Okay.
You're basically buying and owning the asset directly.
Okay.
So like if you go on an exchange, you buy Bitcoin.
Yeah.
You own that Bitcoin.
Okay.
And its value goes up and down with the market price.
So it's almost like buying a stock or a share of a company.
Exactly. You're buying a piece of the asset itself.
Got it.
And your gains or losses are directly tied to its performance.
Okay, so spot trading is more traditional.
Yes.
And then leverage is a little bit more, like we said, playing with fire.
It can be.
Yeah.
If you don't know what you're doing,
Right.
it can amplify your gains, but it can also really magnify your losses.
Right.
It's a tool that requires a lot of careful consideration, risk management, and a good understanding of the market.
So it sounds like, Nico's upcoming conversation about these trading strategies is going to be really fascinating.
I think so.
Maybe we'll get a glimpse into, how he approaches trading in this crazy world.
It'd be interesting to hear his perspective.
Yeah.
And maybe before we move on, we should take a moment and kind of delve a little deeper into, Nico's world.
Okay.
Explore his thoughts on these different trading strategies. And even, we can't forget about that intriguing Trump coin he mentioned.
Oh, the Trump coin.
Yeah.
We'll have to unpack that one.
All right, so stay tuned as we continue to dive deep into this crazy crypto roller coaster. So welcome back to the deep dive. Before the break, we were talking about different ways to approach crypto trading, spot trading, which is like more traditional, and then leverage, which Nico described as a little bit like playing with fire.
Yeah, both strategies definitely have their place in the crypto world, but it's important to really understand each one before, you jump in. Right. So let's dig into this whole leverage thing a little deeper. You described it earlier as borrowing money to kind of amplify your gains and losses.
Yeah.
Can you give us like a real world example? Like how does that actually work?
Sure. So let's say you have $1,000 and you want to invest it in Bitcoin.
Okay.
And you decide, all right, I'm going to use 10x leverage.
Okay.
That means that for every dollar of your own money, you're controlling $10 worth of Bitcoin. So your $1,000 actually becomes like $10,000 in buying power.
Wow, that's pretty significant. It sounds like leverage could turn a small investment into something much bigger. But what happens if the price of Bitcoin doesn't go the way you want it to?
Well, that's the the two sides of the coin with leverage.
Yeah.
It magnifies your gains, but it also magnifies your losses.
Right.
So if Bitcoin goes up 10%, your $10,000 investment grows to $11,000. You made $1,000.
Okay.
But on the flip side, if it drops by 10%,
Right.
your $10,000 shrinks to $9,000. So you just lost $1,000.
So with leverage, even a small price movement can really have a big impact.
Oh, yeah, absolutely.
For better or for worse.
Yeah, for better or for worse, exactly.
I can see why it's considered high risk.
It's definitely not for the, for someone who's risk averse.
Yeah, yeah.
It really requires you to have a good understanding of the market, how to manage risk, and also the ability to stomach potential losses.
Right, right.
Because they can happen.
I can imagine it's easy to get kind of caught up in that excitement, the potential gain.
Oh, absolutely.
And maybe overlook the risk.
Yeah, it's a common pitfall, especially for people who are, kind of new to leverage trading.
Right.
It's really important to approach it cautiously and understand, what are the potential downsides?
Okay, so would you say leverage is more for, experienced traders, people who are maybe a little more comfortable with risk?
Generally speaking, yes. I think, for people who are more experienced, who know how to kind of ride the waves of the market, leverage can be a powerful tool.
Right.
But for people who are new to crypto or who have a lower risk tolerance,
yeah,
spot trading might be a better option.
Okay, so it's really about finding that balance.
Exactly.
Between risk and potential reward.
Absolutely.
And just your own comfort level.
There's no one-size-fits-all approach.
Right.
When it comes to trading.
Okay.
You have to find what works for you, what aligns with, your goals, your risk tolerance, your investment philosophy.
Now, before we move on from leverage, I'm curious, what are some of the things that might cause a short squeeze, like the one Nico's predicting? Is it just a matter of enough people buying Bitcoin, or is there more to it than that?
Well, there's usually a combination of factors at play.
Okay.
It could be a sudden change in sentiment. Maybe there's some unexpected news.
Okay.
Maybe there's some technical factors.
Okay.
Like how much Bitcoin is actually available to borrow.
Right, right.
Like if there's not a lot of Bitcoin available to short, even a small increase in buying pressure can just shoot the price up.
Okay.
And that forces those people who shorted it to cover their positions.
Right.
And that pushes the price up even more.
So it's like this, almost like a self-fulfilling prophecy.
It can be.
That, if enough people believe it's going to happen and they start buying, it actually does happen.
Yeah, the psychology of the market is so powerful.
Yeah.
I mean, it can really drive these upward spirals, downward spirals.
So it makes you wonder, with Nico's prediction.
Yeah.
Is he basing this on, some solid analysis?
Right.
Or just a gut feeling that enough people are going to jump on the bandwagon?
It's tough to say for sure.
Yeah.
I mean, he seems confident.
He does.
But even the most experienced traders, they don't always get it right.
So we should probably take his prediction with a grain of salt.
Yeah, I would say so.
And not, run out and make any rash decisions just based on what he's saying.
It's always a good idea to do your own research. Look at it from different perspectives.
Yeah.
Really weigh the risks and rewards before you make any investment decisions.
Okay, speaking of considering different perspectives, I'm thinking about that Trump coin thing that Nico mentioned.
Oh, yes.
It sounds like something straight out of a meme.
It does, doesn't it?
But he said it actually performed pretty well during this crash.
He did.
Yeah.
Yeah, it's true. Even in the midst of a broader market crash,
right,
you can have these outliers that just they do their own thing.
Huh. So I got to admit, I'm a little bit puzzled by this whole Trump coin thing.
Yeah.
Can you shed some light on this? What is it and why would it be, kind of going against the trend?
So Trump coin, it falls into a category called meme coins.
Meme coin.
These are cryptocurrencies that are inspired by, maybe an internet meme, pop culture, in this case, a political figure.
Okay.
And they're often created as a joke or a way for people to kind of rally around a shared interest. They usually gain popularity through social media hype.
Okay.
And their prices can fluctuate wildly.
Yeah.
So it's really less about the underlying technology or the utility of the coin, and more about the community and the buzz around it.
Okay, so it's not really about fundamentals, it's more about sentiment.
Yeah, you could say that meme coins are driven by sentiment and speculation.
Right.
Not really by, fundamental value. And that's why they can be incredibly volatile, risky.
Yeah.
But, they can also generate huge returns for people who get in early.
Okay.
And kind of ride that wave of hype.
Okay, so I guess that explains why Nico was using those words like crackdown.
Yes.
It sounds like it went on a wild ride.
He mentioned that it started at 20 cents, and then there was a big surge in price.
Okay.
He even described it as like a buying opportunity for those who missed out on the initial, the initial pump, as they say.
Okay. So even in a market downturn, certain assets can kind of, grab people's attention.
Yeah.
Defy the odds.
Yeah, it really shows how unpredictable the crypto market can be.
Right.
And the power of community and, social media influence.
I'm starting to get why Nico's so excited about crypto.
Yeah.
It's always changing. There are these unexpected things that happen.
It really is like a roller coaster that never stops.
Yeah. But, amidst all this excitement,
yes,
we got to remember the risks.
Absolutely.
Like we saw with Bitcoin's plunge.
It can change quickly.
Yeah, things can change very quickly.
It's a world of opportunity, but you got to approach it with, a balanced perspective, make informed decisions, and be cautious.
So while Trump coin is kind of an interesting example of a meme coin going against the trend,
right?
It probably isn't the wisest investment strategy to just jump on every meme coin that comes along.
Yeah, that's probably not the best approach.
Yeah.
It's really important to kind of look beyond the hype and really understand the fundamental value.
Okay.
Meme coins can be fun. They can be exciting, but they're generally considered, pretty high-risk investments.
Got it.
With not a lot of long-term potential.
Before we get too carried away by the whole meme coin craze, I want to circle back to that conversation Nico was talking about having with his colleague about the best way to trade. He mentioned spot versus leverage. What are your thoughts on that whole debate?
Well, it's a great question, and it's a complex one. There is no one right answer when it comes to the best way to trade crypto.
Right.
It really depends on each individual, their risk tolerance, and their goals.
So it's not a black and white decision.
Not at all.
You really have to kind of tailor your approach to, your specific situation.
Exactly, yeah. Leverage can be great for experienced traders.
Right.
But it can also be really dangerous if you're not careful.
Yeah.
Especially in such a volatile market.
Right.
Spot trading is much more conservative. Works for a wider range of investors, but it may not offer the same potential for, those really big wins.
So you really do have to look at the pros and cons of each approach.
Yeah, absolutely.
And then choose what aligns with your needs and your preferences.
Exactly. And we should probably add here, we're not giving financial advice.
Right.
Absolutely crucial that people do their own research.
Yeah.
Maybe even consult with a financial professional.
Yeah.
Make informed decisions based on their own understanding of the market and their own risk tolerance.
That is solid advice.
Yeah.
It sounds like Nico and his colleague might have some pretty strong opinions with this whole thing.
They might.
Maybe we'll get to hear more about that in a future episode.
Yeah, he did mention sharing his thoughts in a future podcast.
Okay.
So maybe we'll get a glimpse into their trading philosophies.
That'd be great.
Yeah, and he also mentioned, he kind of hinted at some other projects he's working on.
Oh, really? Like what?
This is really interesting, like a Netflix of trading tools.
A Netflix of trading tools.
Yeah, he was calling it Tradeflix or maybe Toolflix.
Interesting.
It's still in its early stages, but, he's kind of envisioning this curated platform where you can access all these different trading tools.
Right.
Educational resources, market analysis.
Right.
All in one place.
That sounds incredibly useful, actually.
Yeah, I think so, too.
A platform like that could really be a game changer for new traders, even experienced traders.
Yeah.
It could give them access to tools that were previously only available to, big institutional investors.
Yeah, or people with a lot of money.
Yeah.
Right? And that's exactly his goal.
Okay.
He wants everyone to have the knowledge and the tools they need to navigate the crypto market.
I mean, it's pretty impressive, all the things that Nico's doing.
Yeah, he's definitely got a lot going on.
He's clearly passionate about crypto and he wants to make it more accessible.
Absolutely. His energy is contagious.
Yeah.
It just goes to show the crypto space, it's just so dynamic. There's always something new happening.
Yeah.
Always something new to learn.
Right. But, with all this excitement,
Yeah.
We got to remember there are risks involved.
Oh, absolutely.
Like we saw with Bitcoin.
Things can change very quickly.
So you got to approach it with a balanced perspective, make informed decisions.
Absolutely, yeah.
Be cautious.
Be cautious, for sure.
So before we get swept away by the next big thing in crypto, I want to kind of, step back and think about, like, what are some of the key takeaways
good idea.
from, this whole deep dive into Nico's world?
Well, I think what really stood out to me was just the stark contrast between, the excitement, the optimism that surrounds crypto, and then the inherent volatility and the risks.
Right.
It really is a space that demands a lot of, thoughtfulness and a willingness to learn. And adapt. Absolutely.
It's like, riding a roller coaster, thrilling and unpredictable.
Exactly.
You might go up to new heights, but you also might plummet.
Right. And it's not just about choosing spot or leverage. It's about really understanding like the nuances of each approach.
Yeah.
And really aligning your strategy with your risk tolerance and your financial goals.
Well said. And speaking of aligning strategies,
Nico
briefly mentioned this concept called dollar cost averaging, or GCA.
Right.
What's that all about?
So DCA, this is a strategy where you basically invest a fixed amount of money at regular intervals, regardless of the price.
Okay, so instead of trying to time the market, you're just consistently putting in a set amount over time.
Exactly, yeah.
Okay.
This helps you average out your purchase price, reduces the impact of volatility.
So when the price is high, you're buying less.
Yes.
When the price is low, you're buying more.
Exactly.
And over time, this can help you build a position without having to worry so much about those fluctuations.
Right. It can help you kind of smooth out the ride a little bit.
So that sounds like a strategy that could be good for, seasoned investors.
Yeah.
Even people who are just starting out with crypto.
Yeah, it can be very approachable because it takes some of the guesswork out.
Right. But even with this kind of, more passive approach, you're still exposed to the risks of the market.
Absolutely. No investment strategy can eliminate risk completely.
Right.
Especially in a market as volatile as crypto.
Yeah.
We have to remember, Bitcoin and these other cryptocurrencies, they're still relatively new.
Right.
And the long-term prospects, they're still uncertain.
So even if you're dollar cost averaging, you got to be prepared for the fact that, your investment could lose value.
It's definitely a possibility.
Right. Okay.
You got to be realistic.
Yeah.
Understand the risks.
Okay.
Crypto can be rewarding, but it's not like a guaranteed path to riches or anything like that.
That's a good point, a good reminder.
Yeah.
For anyone thinking about, jumping into the crypto world.
You got to balance the excitement of potential gains with the reality that you could also lose money.
Right. Absolutely.
So I think it's time we address the question that's probably on everyone's mind.
Yeah.
After hearing all this stuff about Nico, the question of, should I invest in crypto?
That's the big question, isn't it?
Yep.
Given everything we've talked about.
Yeah.
Bitcoin's volatility, leverage, trading strategies, the unpredictable nature of the market.
Yeah.
It's a tough one.
Would you invest?
It's such a difficult question to answer with a simple yes or no.
Yeah.
It really comes down to each individual's circumstances.
Right.
Their risk tolerance, their goals, even their beliefs about the future of crypto.
Okay. So there's no easy answer.
None at all.
So maybe instead of, giving our listeners a definitive answer, we can leave them with some things to think about.
Yeah, I like that.
Yeah.
As they, figure out their own path.
Absolutely. Yeah.
So, first and foremost, you got to remember crypto is high risk, high reward.
Absolutely.
Big potential gains, but also big potential losses.
That's the nature of the game.
And it's important to think long term.
Yeah, absolutely.
Even if you're tempted to, chase those quick gains.
The market's still young.
Yeah.
Likely to see a lot of volatility in the years to come.
Yeah.
It's the patient investors who are going to be rewarded in the end.
And diversification. That's important.
Oh, yeah.
Don't put all your eggs in one basket.
Exactly. Spread out your investments.
Across different cryptocurrencies.
Different assets.
Don't forget about stocks, bonds, those traditional things.
It's all about managing risk.
Right.
Protecting yourself from the inevitable ups and downs.
And I think, finally, it's so important to always be learning.
Absolutely.
The technology's changing so rapidly.
All the time.
New things are popping up all the time.
Exactly. Yeah.
So staying informed.
Yeah.
Educating yourself, adapting to these new developments. That's crucial.
It's a constant process
Yeah.
of learning and adapting.
Before we jump into the final part of this deep dive,
Mm.
let's take a minute to kind of gather our thoughts. I mean, we've covered a lot of ground,
We have.
and there's still more to explore in Nico's world. Stay tuned for the exciting conclusion of the deep dives. So welcome back to the deep dive. We've been exploring the world of crypto, through Nico's experience.
Yeah, quite a journey.
It has been. Before the break, we were talking about dollar cost averaging. And, it seems like a much more measured approach compared to, leverage and all that.
Yeah, DCA is really about, taking the emotion out of investing and embracing a long-term view. So instead of trying to perfectly time the market, which, let's face it, it's pretty much impossible.
Yeah, good luck with that.
You're just investing a set amount at regular intervals, no matter the price.
Okay, so let's say I decide to put $100 into Bitcoin every week. No matter what's happening, that's DCA.
That's DCA in action. So by investing consistently over time, you're averaging out your purchase price. That reduces the impact of that volatility.
Okay, so when the price is high, you're buying less Bitcoin.
Exactly.
When it's low, you're buying more.
That's the idea.
And over time, you kind of build up this position.
Right, without having to, check the price every 5 minutes and stress about it.
It sounds like, a strategy that could be good for anybody, really.
Yeah.
Seasoned investors, people new to crypto.
Yeah, it's very approachable.
Takes the guesswork out.
Exactly. One of the nice things about DCA is it can be automated.
Oh, okay.
So you set it and forget it.
So it's a good way to, just test the waters without getting, too overwhelmed.
Exactly.
But even with this more passive approach,
Mm-hmm.
you're still exposed to the risks.
Right, absolutely. I mean, no investment strategy can completely wipe out risk, especially in a market as volatile as crypto. We have to remember, Bitcoin, other cryptocurrencies, they're relatively new.
Yeah.
And their long-term prospects are still kind of unknown.
So even if I'm, carefully dollar cost averaging,
Mm-hmm.
I should still be prepared that, I could lose money.
Yeah, it's definitely a possibility. You have to approach any investment with, realistic expectations.
Right.
And understand the risks.
Crypto can be rewarding, but it's not like a magic, money tree.
Not a get-rich-quick scheme.
Right. So, it's a good thing to keep in mind
Absolutely.
for anyone thinking about, getting into the crypto world.
You got to balance the excitement,
Okay.
the potential gains with the reality that you could lose.
Right. So I think it's time we kind of, address the big question.
The elephant in the room.
Yeah, the one that everyone's probably thinking after listening to all this stuff about Nico.
Yeah.
Should I invest in crypto?
That's the million-dollar question, isn't it?
It is.
With everything we've talked about, Bitcoin going up and down, leverage, different trading strategies, how unpredictable it all is.
The Trump coin.
The Trump coin, yeah. It's a tough one.
Would you invest?
Honestly, it's such a hard question to answer with a simple yes or no.
Right.
Because, it depends on so many individual factors.
Right.
Your own personal circumstances.
Yeah.
How much risk you're willing to take.
Your goal.
What your goals are. What you believe about the future of crypto.
So there's no easy answer.
There's no one-size-fits-all answer.
Yeah. So I guess instead of giving, our listeners a definitive answer,
Right.
maybe we can just leave them with some things to think about.
Yeah, some key takeaways. I like that.
Yeah, as they, kind of navigate this world.
So first and foremost, crypto is high risk, high reward.
Right.
Big potential gains, but also big potential losses.
Okay. And it's important to kind of have a long-term perspective.
Absolutely, yeah.
Even if you're tempted to, just get in and make a quick buck.
The market is still so young.
Yeah.
It's going to be volatile for years to come.
Right. So patience.
Patience is key.
Okay. Diversification, that's always important.
Diversification is always important. Never put all your eggs in one basket.
Yeah, like spread out your investments.
Exactly. Different cryptocurrencies.
Yeah.
And even, don't forget about those traditional assets like stocks and bonds.
Right.
It's all about managing that risk.
Okay. And I think finally, just always be learning.
Yeah, always be learning.
The technology is changing so fast.
Constantly evolving.
Yeah, new things are popping up every day.
Absolutely.
So, staying informed.
Staying informed, yeah.
Educating yourself.
Educating yourself, absolutely.
And adapting.
That's how you stay ahead of the game.
Yeah. Well, on that note, I think, we've reached the end of our deep dive into the crypto roller coaster.
It's been a wild ride.
It has. It's been informative. It's been thought-provoking. And I hope, our listeners feel a little bit more prepared to navigate this crazy world.
Me too. And, whether or not you decide to invest,
Yeah.
it's a topic that's worth understanding.
Yeah.
I mean, it's shaping the future
Oh,
of finance and technology.
absolutely, absolutely.
So, it's going to be interesting to see where it all goes.
It is. And if you want to learn more, don't forget to check out our show notes. We have links to all sorts of resources.
Lots of good information.
And be sure to follow us on social media for all the latest updates.
Yeah, we'll keep you posted.
Until next time, thanks for joining us on The Deep Dive.